following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit
That's awesome.
for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 38, NASDAQ up 35, S&P's down 4, gold contract down $4.10, trading at $12.48 an ounce. Silver down 10 cents, $14.59 an ounce. Light sweet crude off $1.80, $50.80 a barrel. Notes and bonds, 10-year note down 1 tick, 120.22. 30-year bond up 5 ticks, 143.16. They just refuse to back off, folks. They continue to want higher price, lower yield. King Dollar's got a bid underneath it. We're up 674, trading at 97.150. The euro is at 113.57 to $1 US. The yen is at 113.21 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, from the highs to the lows, back to the highs out here, we've had quite a day, folks. You had the S&Ps come down to 25.53, 25.83. Right now, you're at 26.31. So the bottom line is that you are, what's that? That's 17.32.42. You're 50 points off of those lows. Now, let's go take a look at this intraday and see what we got. Okay, so intraday, what you have out here, you've come into the highs from last night. The highs from last night, or actually this morning, was 26.45. The way you did this is going to get really intriguing coming into this close, because what we have is this. I'll bring this closer. So what we did is that we came right into the downdraft that was out here this morning. Now you came into that downdraft with tremendously lighter volume. So that sets up that, guess what? Coming into the close, you're down 350. This is still saying it wants lower price coming into the close. What you also have is that you have the high volume low at 11 o'clock this morning. Now, I don't expect we're going to go all the way down to the lows out here this morning. What I do expect is that we're going to be somewhere down into 26.15. You know, so you're only down $3 right now. That'd be saying that you're going to come down another $15 from there. So you end up being down about $18. Why? Because what ended up happening is that when I try to basically get into and get over that level just 20 minutes ago, you had 40,000 contracts versus the 70,000 versus 103,000. Bottom line, that's not enough to break topside. It's going to try a few more times, I expect, no doubt. Inside the composite, so the composite, we take a look at the composite. What you had with the composite gets down to a price point. It never broke the low. The composite gets to a price point of 68.78. You're trading at 7,000 right now. NDX 100. What you have with the NDX 100, we have done 60 million shares. You're going into 102. So you're not going to get the volume in the NDX 100. You know, more than likely we do about 80. That being said, if we pull this up and we take a look at it, you're going to see that the 3 Qs, what did she just do? Okay, so she came into 163, 2.4 million. Yeah, it's not going to happen. Okay, cool. Okay, so when you just spiked higher in 10 of 3, you did it with 800,000 versus 2.4 million. That's saying also that we're going to close under the 162.60 inside the 3 Qs. The small caps are just, they just can't catch a bid. You know, you got a bounce going. Small caps just can't do it. The small caps is the first major indice to get into this high volume low from February. That number is 142.50. We hit 140, 145. Right now you're trading out at 143.50. Notes and bonds continue to say they want higher price, lower yield. 10-year note out here today, we are trading at 120.22, flat market. That being said, you're already at 1.9 million contracts. Big number. The bond market just doesn't want to stop. We go take a look at the 30-year. 30-year set up the exact same way. 30-year right now, big volume still, 405,000 contracts. Anything over about 282 in the 30-year, folks, is big volume. Last week we did 700,000 on Thursday. It's pushing highs and pushing highs with real juice. We have the 10-year right now yielding 2.85 for the last 6 months. The low out here, let's see, 2.81. The high 3.27. For the year, we're smack dab right in the middle of it. We go take a look at the King. Let's go look at King Dollar. So King Dollar's caught a bid out here, and what you do have, this is going to be a toss-up here. The reason being is that what you have is this: is that King Dollar got back under the August 15th swing area, which was the 96,450. Right now, we're at 97.16. You've done 36,000 contracts. So when you get a day like this, it's like, okay, what did you do? Did you push lower with volume or push higher? You don't know. That's what it comes down to. Because the spread, you know, yes, you did break into the low, but guess what? You're right next to the highs also. So we'll see where this baby shakes out in the next few days. What we do have is this. If we go over to the pound, what you're going to see inside the pound, this thing broke lower in a huge way. That was no Brexit vote. Bottom line, that did break lower in a huge way. Earlier in the day, the dollar wasn't basically reacting to that. The euro also gave it up, and that's what the dollar reacted to intraday out here. The euro gave it up from a price of 114.43 down to 113. Some of the higher volume equities out here. Actually, let me look at the indice volume first. Indice volume out here, you're at 588. We're going to get volume. You're going to get a lower low out here today with volume, folks. We did 1 billion on Friday. This is going to be way over 1 billion because we're already at 588 inside the NYSE. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now down 77. You get the Nasdaq up 21. S&Ps are down 10. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. And don't forget, folks, Steve does an outstanding program here every trading day, 1 to 2 Eastern Standard Time. He also has a great newsletter. The way you get that newsletter is you come over to our website at TFNN. You're going to go under featured content. You're going to see mastering probability right there. And as you 6 months or a year. In each case, folks, it comes with a 30-day money-back guarantee. Nothing to lose, everything to gain. And then, of course, our man, Mr. Steve Rhodes, is the #1 market timer for the S&P 500, as well as T-bonds right through November of this year, according to Timers Digest. It's a beautiful thing. Steve Rhodes, what's going on, brother?
Time is flying. Is it
oh,
not?
man,
I mean,
it really is. It's hard to comprehend, man.
It is. I was looking at my calendar, just trying to plan ahead for the rest of the year, and so next Monday will be our last Monday together for 2018.
Wow.
Because of when the holiday falls.
That's scary.
So, you know, it's just, and in fact, yesterday as I was preparing some information for my subscribers, and what I like to do at the end of the day, Tom, I will go ahead and put together a report for subscribers of what each of the major indices and the ETF structures have done, maybe a little message about what to anticipate, and then in the morning I follow up with you know, what have the futures done overnight. So yes. I'm always trying to keep them informed. And when it comes to the Friday close, oftentimes I'll wait till Saturday or Sunday when I've got just a little bit of idle time to sit down when the markets are closed and it's quiet, just kind of you know, get my head, you know, wrapped around what's it, because as a technician, what you and I are doing is always evaluating what's the new information, you know, that the market is providing to us. You and I were just narrators of the story of the market. And last time we talked, we had briefly touched on the consolidations. I thought that that would be just a good place for us to just a quick review of where we're at, because it's really important with regard to the trading, at least that I see, that's going on inside the marketplace. So what we're in right now is a consolidation. It's very clear with regard to the price points that have been established, because when we take a look at this monthly chart for the Dow, we can see the high in 2018 and the test of that high, the January high in 2018, the test in October. And it's much easier to see when you use a monthly time frame chart, a larger time frame chart, because you cut out a bunch of the noise. And then I know you talked about the February lows just a little while ago with regard to the Russell 2000. And inside the Dow, that low is 23,360. And we're in this consolidation. Now, if we take a quick peek at the 2015 consolidation, at the bottom of the chart, you'll see a time frame tool that shows that from the high of the consolidation in 2015 until there was a real crack of that consolidation, it was about a 20-month time frame. So if we take a look at the high in January, we could be looking at 20 months, which would take us into September of next year. So this jostling back and forth, it could, and the reason why I say that is not just because of this one example. If we go back and we take a look at historically the consolidations inside the Dow, they last on average for that period of time. Now, the key, though, is, how do we know when the bottom of that consolidation, when is the right time to actually come in and take a look at it? And here, what we can do is we can take a look at one of the first tools that you taught me. Let's face it, I would not be the #1 timer in the S&P 500, the T-bonds, or anything without having come to you and to start learning the tools of the trade out here. And if we take a look back in 2015, we can see that at the August 24th low, there was about 35 million shares, give or take, inside of the Dow diamonds. So I'm just using the diamonds here. Yes. And then on another push lower in January of 2016 and in February of 2016, which is a normal time period for the market to make a low. The typical cycle, Tom, is we get a Santa Claus rally. Right now, it's just coal. So I don't know. I was nice. I know you're nice. Who's been naughty out there? But, so there's a typical, the market moves higher into the Santa Claus rally, end of year time frame, then pulls back in the end of January, February time frame. In this case here, back in 2015, it was a test of that area. It never got down to the lows, but on lighter volume, as you always point out to us. So 16 million and then followed by 14 million. Now, this year is much different than 2015, because we could say that today, in essence, is the fifth push lower since the February 9th, 2018 level. Now, inside the Dow diamonds, we were looking at, 20 million shares, followed up with 9 million shares. Then the next push lower was about 6, then about 5.5, about 7 back in October. Now today, I don't know what the real number. Now, when I took this snapshot, it was about 5 million shares. I suspect we're in that 6.5, 7 million share range, but we don't know what type of volume is going to come in on the close orders and so forth out here. But we're down towards that bottom of that consolidation level. So today's close would be important, because if the Dow diamonds, I don't know whether they will or they won't, but if they were to close above 244.03. That would be a rejection of that February 9th level. So that's something that traders should be looking for, whether it's today or it's tomorrow or it's the next day, whether it's the top of that swing point or the bottom of that swing point. It's something that folks should, pay attention to. Now, one of the things, sorry about that, something just kind of, we speak, and sometimes we're talking, we breathe in, and a little bit of dust gets in there. It's terrible. It's crazy. But here's what I wanted to do. I don't really talk about the newsletter too much when I'm on with you. And what I wanted folks to realize at this moment is that if they sign up for Mastering Probability, there are 6 different workshops that are on their members page, 6 different hour workshops. Actually, the Money Management Workshop is a 90-minute workshop. And so for those folks that are looking to garner an education, as I did back when I started with you back in 2006. And I can tell you, folks, if I can do it, you can do it. It's just proof in the pudding. And what I mean by that is learning how to be able to time the market and utilize these tools. So for folks that are interested in doing it, now is a great time. Here's Steve's Christmas gift to everybody that's listening out there, is to sign up. You've got that risk-free 30-day money-back guarantee, as you've pointed out. Can sign up for a month month or 6 months or a year, doesn't matter out here. But for 30 days, you're going to get access to this. Now, next Tuesday, I'm going to actually hold a subscriber event. And that subscriber event is really just going to be covering what subscribers want me to review as we go into the end of the year. And some of those things are going to be covering the New York Stock Exchange Advanced Decline Oscillator, the Advanced Decline Line, the plus 150, minus 150 readings out there. Take a look at long-term portfolio management. It's a great time to do that, especially when we're in this consolidation period. How to position yourself between U.S. equities, foreign equities, fixed income, real estate commodities, master limited partnerships, and so forth. And in any question, if you're a subscriber that you send to me, we will try to incorporate into next Tuesday's workshop. And you don't have to be there live. You just simply sign up, and you'll get an archive of that workshop on your members page. So it's been a great 2018. Looking forward to next Tuesday, and of course next Monday with you as we wrap up our Monday sessions for 2018.
Wild, man. And folks,
Yes.
the way you do this, come over to our website at TFNN. You're going to go into featured content. You see Mastering Probability. You subscribe right here, right now. That gets you a great newsletter as well into that workshop next Tuesday. Steve, you have a great one, safe one. We look forward to the show tomorrow.
Thanks, Tom.
Stay right there, folks. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 4. You got the Nasdaq up 46. S&Ps are going to be green any second. They're basically flat right now. Let's go to our man Carlos in Texas. Carlos, what's going on, brother?
Hi, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing very well, thank you.
Good. Good to talk with you, man.
Oh, it's always a pleasure to talk to you. And the reason I'm calling today, Tom, is Okay, I have a question related to the SPY.
Yeah.
What makes the SPY more bearish this time? Technically, you have explained it, but in the past, we have faced situations many times where I can hear everybody getting more bearish, and we still keep going up. And I have been burned several times down, and I'm short right now, actually. And what makes this more bearish compared with in the past situations since we had this big rally? If you can help me out with that.
Yeah, and so you're talking about the past years, right?
Yeah.
Okay.
Since we start in the
No,
SPY
that's
from 181 to till, let's say, 293. If you can look at that picture. And
well,
I'm looking at the
can you
weekly
say that part of it again?
Yeah, from the 181 to the
Yeah, oh, good, exactly.
293
Okay,
and
so
the SPY and
what has definitely happened here is this, okay, is that since the Fed basically is off the lever, you know, the bottom line is that the art of time in the trade, these numbers are coming in, they're coming in just like they always come in. That's the reality, man, you know. And it's not that it's a different market. It's definitely a different market than it was for the past 7 years. There's no doubt about that. But these numbers are coming in, man, and they're coming in every sector, and it's just, it's real, you know.
Yes,
so,
and well, when I hear your take on the market, it's because what I'm doing, I'm not trying to pick a real top or real decisive turn point.
yeah.
But I have placed positions where I can remain short in those ETFs. I know it's not the best way, but at least I don't have to be in and out of the market based on the situation I'm facing right now. But I have placed my stops, and right now I'm doing okay. But I actually want to hate to give back my gains in case these markets.
No, listen, I understand exactly what you're saying, because the differential in the last year has been dramatic. There's no doubt about that. You know, as to how it's moving here. Let me show you something just from today, folks. Now, this is going to get really interesting from today, and this is why. Is that you have, inside the S&Ps, you have a larger, now this is the S&P futures. You have a larger ABC structure on the way down. That's going to get you not only to the February high volume low, but it'll get you past it. And we did that right at the open this morning. There's a 99 A to B equals C to D. That'll take you to that lower price. And then what you have another ABC inside this structure that took you right where it was supposed to go, which is really wild. And that structure there started at 26.45, which was, you know, 8 o'clock this morning, 8:30 this morning. You got down to this 26.09. So we got, what's that? That's 45. That's 35 points. We get a C point out here at 26.29. So that'll bring you down to, what's that? 25, basically 90. Well, we made it to 25.83. Now, the way that I'd trade this, Carlos, goes like this.
Yeah.
Is that you have a high volume low down here that's going to get tested again. So yeah, it finished an intraday ABC down. It has a much larger ABC down, and that larger ABC down I'm taking off from the highs that were Friday where it gave it up. So if you take that high of Friday of 27.09, you know, you take the low out here of 26.10, you get basically 100-point A to B. So that's kind of how I'm looking at this market.
Okay, Tom. And can I say that that the way this market looks, we're not going to have any kind of end of the year rally?
That's my take on it. And the reason being, so what you have is this also. You have, after today, we have 14 trading days left. That's not, to me, that's not enough time, number one, to get anything going. You know, we'll see if that's the case, but that's a heads up. What's also a heads up is this. Now, this is pretty cool, folks, for all you folks listening in the afternoon verse. I went through this morning. You better pay attention to how these markets are trading, and specifically over in Europe. Because if I put the FTSE up, you know how long I've been saying that, okay, we're going to the high volume low in February. Well, the small caps made it, the S&P's next to it. Well, what happened in Europe is that the FTSE blew this thing away. That's a monster heads up for us in the U.S. The FTSE 7,073 was the number. This thing basically took this apart last week. It's way below it. The DAX in Germany, same setup. DAX in Germany ripped it apart. If we take a look at the DAX, you're at 10,600. That low was 12,000. Then on top of that, all you have to really do is go to the financials, and you're going to see the financials can't get out of their own way. The XLF, 2676 was that high volume low, and the financials took it apart also. And and then go to the XLE. What we're doing here is that we're taking the largest, most important parts of the economy, and you're going to see the XLE 64.45, and you're at 63.17. So when you take the smaller picture that you had the ABC structure down today, you had one inside the other. Then you take this larger picture. You want to basically sell the rip instead of buying the dip. That's kind of how this market's set up. And, we'll see where it shakes out, but that's what it looks like to me, man.
Well, Tom, I really appreciate everything you do, and I want to thank you again.
Thanks, Carlos, man. Have a great one. Have a safe one.
And everybody have a great end of the year.
Yeah, have a Merry Christmas, man. That's right, it's coming. Ho, ho, ho. Where's that Santa Claus?
Yeah.
Where is he? We better call him up, man.
Better don't show up because I'm short.
I know. And we want him anyway. He'll come with a little, hey, listen, it's been a big run. I mean, that's the other side of it. Cooking, brother.
Take care.
Have a great one, man. Have a safe one. And then on top of that, folks, you want to go over to the bond market. You take a look at bonds. Bonds, depending on how long you've been listening, bonds they just have not backed off, man. And guess what? If the stock market is going to go higher and stay higher, these bonds should have backed off a long time ago, man. What you have out here actually with the Fed Fund futures rate, which is pretty wild, folks, is that a few weeks ago we were over 50% that you were going to have rate hikes, 3 rate hikes actually in 2017. Guess what? There's not one right now in 2019. There's not one in 2019 right now that is over 32%. Okay? That is a heads up. Dow Industrials right now up 96. You get the Nasdaq up 76. S&Ps are up 11. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now trading up 81. NASDAQ is up 67. S&Ps are up 8.5. And what you're going to see out here, folks, particularly because we get high volatility, but what you're going to have a lower low, and you are going to have volume in the indices. So we're going to get to a lower low with volume out here today. JP Morgan, let's go take a look at one of the premier banks out here. So JP Morgan, the low for year is $99.28. That's today. High is $119. You're down $1.64. You're trading 20 million shares. The swing that you're going into had 16, 17 million. This is a monster problem for JP Morgan as well as the markets. So I'm going to bring that. That's saying 102 to 119. That's 17 bucks. That's setting up like an 85 for JP Morgan. So let's see what we got here. What was 85? There's 85 right there. So that's this way it looks like it's going to go. So pitch this with JP Morgan, folks. She had broken topside December of 2017. Nice volume on the move. You know, we went from price point of $97 to $106 the week of December 1st. 94 million. Well, we came down on 86 million last week. This week, and last week we had 1 day off. So actually you came down on more than that. You came down with more than we had gone up on, because if we did 86 million in 4 days, that means that we're up at least 106 million, and that 106 million was going into 94. Now, what do you have out here today? Well, you've already done 20 million. So now you're breaking down into its strength. You're breaking down with volume. When you do a point projection on this, because we already just broke the 102, you can take the 102, then you just take the top of that 119, you take 17 off 102. That's how that kind of sets up. So if you have the premier bank going south with volume, that is a heads up in a big way. And I suspect, you know, what's happening here is that the aspect of us going down on interest rates, you know, versus going up. I mean, we started the year out at bottom line, you know, the Fed was telling us flat out that they were going to raise this year, and they were going to raise an additional 3 times in 2019. Well, bottom line, your probability's gone down dramatically. In fact, if you just look at the market, meaning the aspect of traders trading the Fed fund futures rate, that has gone down dramatically, and it's now below, well, so the highest one, which I just said, is only 32%, and that's for the full year. You know, what has happened is that, and this one's going to get interesting too, what has happened is that we're at 69% for December 19th. Now, my take is that they're going to go up December 19th because if they didn't go up December 19th, it would probably just be the opposite, meaning that the market would really freak out because they'd be saying, okay, why aren't they going up December 19th? They've been saying they're going to go up forever. So I suspect that you're going to go up for December 19th. What we'll get inside of the statement, because you got to remember something that, let's see. Yeah, we get a news conference then, and then every meeting of next year has a news conference. But inside that statement, there'll be a statement that they're going to get, I suspect, more dovish. Oil market, if you want to see, just as when I was talking with Carlos, the market was bouncing really nice. And if you want to see just how markets love to bounce after vicious downdrafts, just look at the oil market. We went straight down from October 3rd. We're at $76.55. You go straight down to $49.41. And then when it looked like you got a big bounce, the fact of the matter is you gave it up on price. We had made it to $54.30 last Friday, $54.22 actually. Bottom line, gave it up, man. This thing is building cause because when you put this on a larger time frame, what you're going to see is that 45 bucks is coming at you out here in a huge way. And there's not much in the way. See, once we had broken into the $54, your lower range here is $45 to $42. And there's nothing, there's basically nothing holding oil down until those levels. That's what it comes down to, because we're halfway in between the move. 55 is the top of that deal. You can make a case at 42. I'm going with 45 just because there's enough little swing points there at 45. But 45 to 42 is certainly game. If you go take a look at the XLE has, right from the get-go, the XLE has been saying that oil is going lower. Now, what happened, which is really wild, it actually took, the XLE was ahead of itself by almost a couple months, folks. That's a pretty intense deal, but that was the fact. The XLE, February 9th, same deal. It's under February 9th, can't hold price. The XLE wants to run down to this $56 level. So there's a lot of action out here, and we'll see if, in fact, when we get down to that high volume low, if the S&P is going to hold it. I can tell you that my take each and every day right now is it actually isn't going to hold it. The reason being is that it'd be very unusual that the DAX couldn't hold it, the FTSE couldn't hold it, you got the XLE underneath it, we got the XLF underneath it. It's a big heads up, Google is another one you're going to want to watch. The reason being is that Google had been the first major stock to go down and test it, and it rejected it. It tested it again. It rejected it again. It's laying there now. On Google, it's 992. You're at 1,043. So Google will also glean some really good information from us. Right now, it's still above it, which is really positive for the S&P, as well as the NDX 100. Keep your eye on it, though, because if Google breaks, particularly because that was the first one, then the retracement here is going to be larger than we think. And hey, guess what? When I look at it fundamentally, and the tariffs in China, those tariffs, folks, are monster taxes. If we actually go to 25%, you are going to basically, and I am going to get hit with tax on just about everything. Because guess what? Everything's made in China. You can't go to a Home Depot, a Lowe's, a Best Buy, a Walmart. You can't go to anywhere. You might as well just put made in China instead of those names up in all of those stores. So if you think major companies are going to take the 25% hit, you're dreaming. We're the ones that are going to take that hit. And as I said many times, once you get in a brawl, what happens is that you forget why the brawl started, and it starts escalating. In this particular case, the escalation is going to be in our pocketbook. That's the way this baby is shaken out. You had Facebook today turn around and they're buying back $4 billion in shares. Guess what? It's not going to do a thing for it. It's got 22 million shares. Big deal. You're at 142. Facebook's going a lot lower. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is up 56. You get the Nasdaq up 56. S&Ps are up 5. We'll take a look at some of the higher volume equities out here. In this market, we'll have volume out here today, folks. It's going to be interesting watching this close come in because we're at 679 right now. That's saying it's going to do about 1.2 billion. That's what it looks like in the NYSE. If we take a look at some of the higher volume equities out here, you're going to see that Bank of America is leading the charge. That's down 65 cents. You get GE. Oh, look at GE. Oh, here we go. This is sick. Okay, GE just broke the whole $7 level. You're at it hit 675. So good old GE. This I think it's 585. Yeah, 572 is coming at you. And we had volume last month of 3.3 billion. You're going into 5.9, but guess what? It's going for it, man. In fact, you know, what we did have here, GE is a confirmed ABC down to a minus number. So don't be surprised if GE goes BK. The A point on this is 32. The B is 12. So you're talking about some nasty figures. That's a 20-point A to B. The C is $15.49, which brings you to a minus 4.5. So that is a stock that looks like it's going to go out of business. You get Ford Motor Company down 30. We got Microsoft up at 288. Now, Microsoft's a great one to look at because Microsoft's one of the strongest stocks in the market. And bottom line, that has a nice bounce, but guess what? Not enough volume. 33 million versus 49, going into 63 as well as 61. So when you look at equities, you want to pick out some of the strongest stocks and see how they are moving. That's a nice way of setting it up. You get Wells Fargo down $1.39. Citigroup is down 124. Transocean, Rig's in trouble. Rig looks to me like it's going south too. Rig is just down in 3 months from $14 to $8. I believe this busted everything. Yeah, it's busted everything. I just went back. Let me go back 50 years. Yeah, it's busted everything. Rig has nowhere to go. Stay right there, folks. Going to be coming back with some numbers. We have the Dow Industrials trading up 71, NASDAQ up 59, S&P's up 6. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update. Here's Tom O'Brien.
Welcome, folks. We had the Dow Industrials finish up 30, NASDAQ up 51, S&P's up 3.5, and, you know, that's not a lot of points up there, folks, but when you do look from the lows today to the highs, bottom line is that you got a good little bounce out here. That being said, I expect we're going to be right back downtown. Dow Industrials, you had a low out here today of 23,881. And bottom line is that you can see flat out that you're $600 off of that low. That being said, guess what? You're going to have volume in this market, folks. So you get a lower low with volume inside the market. That means we're going right back down. You take a look at the 3Qs. 3Qs, they're the only ones that are going to be able to get probably some kind of a bounce. 69 million shares going against 102. That's saying that, yes, you can get a bounce inside the 3Qs. Small caps, saying just the opposite. Small caps not only are down, they hit their February high volume low, can't hold price. You get 29 million right now, going into 36, and they will blast another probably 5 or 10 million coming into this close out here today. They just blasted 422,000, but they get about 5 more minutes to put more volume inside the marketplace. We're going to take a look at the SPY. Same setup inside the SPY. The SPY, we're at 146 million shares. That's going into 160. The SPY will also pump probably another 5 to 10 million in the next 5 to 10 minutes. So what you have out here is that you get the S&Ps hitting those lows with volume behind the move. They just put 1.7 million into the SPY coming into the close. We'll see whether we get a little bit more out there. Gold contract had a sideways move out here. That being said, you are pushing into the highs and you have volume behind the move. 188,000 contracts. Like to see 200,000, but bottom line, that's not a bad way to come into those highs. Notes and bonds continue to want higher price. Note and bond market, bottom line, they have volume as well as price. The 10-year right now is at 120.22. If we go over and take a look at the British pound, that baby got smoked out here today. That got down from a price point of 127 to $1 US to 125.59. Stay right there, folks. Going to be coming back with some numbers after the close. To recap out here, we had the Dow Industrials finish up 34, NASDAQ up 51, S&P's up 5.5. Come right back.
TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We had the Dow Industrial trade up 34, NASDAQ up 51, S&P's up 4, gold contract down $3.10, trading at $12.49 an ounce. Silver down 8 cents, $14.61 an ounce. Light sweet crude down $1.75, $50.86 a barrel. Notes and bonds, you get the 10-year note down 1 tick, 120.21. 30-year bond up for 143.15. King dollar up 699 ticks, trading 97.175. The euro is at 113.54 to 1 US dollar. The yen is out here at 113.21 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the S&Ps, let's take a look at them. What do you have? So if we take a look at the SPY, what you're going to see out here, folks, is this. SPY gets into the high volume low that was out here from October 29th. We got to 258, so you broke it, 259. We've done 148 million shares versus 160. So bottom line is that you do have a rejection of lower price, slightly lighter volume. It's a toss-up. Nominally, well, it's lighter volume. That's the bottom line. You'd like to see a lot lighter volume, not 148 versus 160. That's in the Qs. Now, that's in the SPY. You take a look at the Qs. The Qs have the best shot of getting a bounce going here. The Qs did 70 million shares. That's going into 102, as well as 111. And what happened is this with the Qs. We got down to 159. The high of the low is 160.138. So you definitely rejected that, rejected with lighter volume. We'll see what kind of a bounce we can get out of this. I expect you can see the Qs actually bounce up into the October 11th area, which is 167.81. That's the last time we had monster volume on the way down, outside of the aspect of this low that was generated out here at 160. Small caps got a different ball game happening altogether. Small caps can't hold a bid. We've done 29 million shares. That was going into 36 million. We pull this back, and the small caps were the first indice, major indice, to get down into its high volume low from February. We hit it today, $141.45. That high volume low is 142.50. So bottom line, keep your eye on the small caps, because the small caps are going to tell us quite a bit about where the other major indices want to go. Gold. Well, let's do oil first. So oil, folks, bottom line, failed to hold price once again. Oil contract is down 3.4%. We had gasoline down 4.4%. Pretty cool. Unleaded gasoline, folks, right now is 141 wholesale a gallon. We go over to the oil market. You're going to see that we're down $1.81. You're at 50.85, and this very well could be doing another ABC structure on the way down. Oil market looks to me like you're going to get down to the 45 area. The reason I'm saying 45 is that once we broke into the 55 area, there's not much in between 55 and 45. And right now, you're halfway into that whole consolidation. That was the large consolidation. I expect you're going to see lower prices. Gold contract, bottom line, this is pretty intriguing because of the fact that gold didn't give it up when, in fact, the dollar caught a bid. So gold's down $3.10. You've done 188,000 contracts. You're at 1249. We hit 1256. My take, gold wants to go to 1330. 1330, folks, is the high of June of 2018. XAU, HUI, they both had taken out their swing points last week with volume. Bottom line, XAU took out the swing of November. That's saying it wants to trade up to the swing of October. That's $71.64. Right now, you're at $67.40. If we go take a look at the Gold Bugs Index, same type of setup inside the Gold Bugs Index. That had taken out its swing high with volume also. The Gold Bugs Index, which is pretty cool here, is getting and is much stronger than the XAU. Now, what that says, that is saying that actually the price of the metal is also going to go higher, because when the XAU is stronger than the price of the HUI, what happens is that can be stronger because stocks inside the XAU, they can hedge going out as much as they want, where stocks inside the HUI can only hedge 1.5 years production in order to be in the HUI. HUI, bottom line, we're almost at the swing high of October. That swing high is 158.62. Where we are 154. We hit 157.34 out here today. Notes and bonds, bottom line, continue to want higher price. They just will not give it up. And you have the 10-year note out here today, 120.21, 2 million shares, 2 million contracts traded, great contract volume. Dollar index, now this is going to be the wild card, folks, because this is what you have. Dollar index out here today did monster volume, DXZ8. So what we did in the dollar index is that we did 32,000 contracts, and you can make the case that it was going after the lows or the highs. So it's a toss-up. That's the bottom line. I suspect, that being said, we're going to go test the high. The high in the dollar index is 97.530. What we are going to have, if we take a look at this, what you're going to see is I'm going to bring up the British pound, because that British pound got toasted and roasted out here today. As soon as Theresa May came out this morning and said that Brexit vote is not going to take place tomorrow, the British pound went from 127.69 to 125.07. So it broke the whole consolidation that it was in. If we pull this back a bit, let's see where we're at here. No, you're still into some heavy support, actually. Well, 125, yeah. 125 is game. 125.16 is game. So that basically, that correlation broke. If we go over to the euro and we take a look at the euro did get to a higher high and then gave it up. Let's see. This gave it up. Yeah, that gave it up. Yeah, well, 10.50 today. What the UK Parliament is saying now is that they are going to debate the Brexit vote Looks like they're going to debate it after Christmas now. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished up 34, NASDAQ up 51, S&P's up 7. Let's go to Agaro in Newport Beach, California. Hey, brother, what's going on?
How are you, sir?
I'm great. Yourself?
Good, thank you. Thanks for asking. I appreciate it. Regarding Square, I needed your opinion, please. And at the end, when I hang up, if you have the time, if you talk about ABMD, if you have the time, sir. But I'm interested at Square at time, if it's at the bottom or it's going to go lower than here.
And the second one was?
AB, Apple Boy, Mary David.
Okay, cool.
ABMD.
I got it. Okay, so you get Square, which is the credit card mobile payment solution company. The low is $34 for the year. The high is $101. Next time they come out with their numbers is going to be February of 2019, which is pretty amazing. So let's take a look at this. We put this on a weekly. Yeah, it looks to me that, you know, it couldn't. They come off the high with volume. I mean, it looks to me that you get 47 bucks here, or it's 64, 63. You got, what happened here is that you come on, when you come off a high with volume, it's always really dangerous, because what seems to happen is that you get a much larger correction than normal. And that's technically, fundamentally, what that means is that funds have got out of this equity, and they're not supporting it on the way down. So let's just go look at this for a second, see if we can glean something out of this. So what I'm going to do, folks, is that I got a couple buttons that I can take, and you can basically look and say, okay, what's the largest positions that got sold in the last filing? And as I put these up, what you're going to see, and the way this works with a 13F is that they have to be filed 45 days after the close of the period. And when we put this up, what you can do is, you know, basically gauge the amount of selling, and then I'm just going to do this the opposite to see the amount of buying. And what you can see here, Gyro, is that, you know, the first one you wouldn't be paying attention to because that's June 2017. But these other ones you would have to. Now the Vanguard, that's just going to be the ETF structure. So that in itself, I don't really pay attention to much to the ETF structures. That's 3.6 million. After that, however, now you got to start paying attention because you can see Susquehanna got out of almost the whole position. They sold 2.3 million. They only have 796,000 left. Bank of New York sold a third of their position. They sold 1.5 million. They got 2 million left. You had Harbor Capital sold a quarter of their position, 1.23 million left. JP Morgan sold small amounts. That's about 20%. So you go that way, so you can see the selling. Now you're trying to look at the buying. When you look at the buying, you can see that you don't have those numbers. You get Fidelity. They bought 4.8 million, so that's real. That come in. 2 Sigma, 1.8. You get BlackRock. BlackRock would be an ETF, so that doesn't fly. And that's kind of it, you know. So the aspect there is that you can get lower price. If we go over to this other one you got, this thing had some action out here today. So let's see what this is. So they develop, manufacture cardiovascular products. The low for the year is 187. The high is 459. The next time they're coming out with numbers is the 31st of January. Okay, so we bring this back. Okay, this is pretty cool. Okay, so what you have here, yeah, this is a different dynamic. Okay, so you have a couple of different things. When this broke topside, May of 2018, the low was 298. You had volume there of 4.3 million. You go all the way up to 450. You test the 450 with 2.9 versus 3.9. You can see that's why I gave it up. Okay, so you tested the high with 1 million shares left. Stock goes from 459 and comes down to 280. Now watch this though. 280, which was testing the breakout area of 298. 280, we did 2.6 million versus 4.3. That's what you're looking for when you're looking for a bottom. So now I'm going to bring this closer. So that's saying that it rejected lower price at that point. And then, yeah, I like this. This one here, Gyro, looks like it can get to higher price. It's going to have a battle because of the November 12th area there. Okay, the low of that is 330 and the high is 388. But what it has done is tested its breakout area, had lighter volume, and had a small sign of strength on the 27th. Even though it didn't do price a lot, but someone was buying that in the 27th. So watch this. You went up with 1 million. You backed in and tested that again with 500,000. That's a decent setup.
All right. Very good. Very good. I appreciate it very much. Thank you, sir.
Okay, Garo. Have a great one, man. Have a safe one.
Yes.
877-927-6648. Let's see what I got here. There we go. Okay, so let's go take a look at, we had a couple. Come out with numbers here. Where are we? That's interesting. Weight Watchers. Let me just look at this for a second. Weight Watchers didn't come out with numbers, but someone's trying to pump this up right now. Let's go see what Weight Watchers are doing. So Weight Watchers. Okay, so Weight Watchers, you had a couple of analysts come out today saying Weight Watchers is worth $67 on a takeout. Bottom line, don't be touching Weight Watchers. Let me look at this for a second. You talk about a personality stock, man. Here, let me show you something on this stock. I mean, it's amazing because what they've been able to do is keep changing plans on a continual basis. And if I bring this back, you'll see in 09 it was trading at $16, and 11 it was 86, and 015 it was $3.57. Then Oprah got involved, and the thing exploded from 470 up to 105, and then gave it up. This looks to me like, yeah, 28 bucks is still on the agenda. I wouldn't be touching Weight Watchers, in fact, not even close inside the Weight Watcher scheme. Yeah, this is getting interesting. So let's pull this up for a second. There's an article out here, ADT. So watch this. This company. Okay, so we got ADT. Well, ADT, of course, is the Commercial Security Systems and Services. And a long time ago, folks, the bottom line is that was, one of the, not only the premier systems, but that was the system, and that was it. So the low on ADT is $6.93. The high is 13. We take a look at this. Yeah, see, this is a problem child, man. And this is going to be we're going to talk about this when we get back. This is a problem child because of the fact that, you got, bottom line, Amazon, Vivid, you got some big competition inside this business right now, and ADT used to own it all by themselves up until about 4 or 5 years ago. Stay right there, folks. Come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking ADT. Now, when you take a look at ADT, folks, you know, if you bottom line, you take a look at this and where they've been, they owned the security business in a huge way. When I take a look at this, technically, what you're going to see out here is that this looks like it's building a big ABC structure on the way down. Now, the A point on this would be $9.80. The B point is $7.19. So you're talking about, what, $2.20, which would get you somewhere into the $6 range. So I believe this thing, this is going to be one of these equities that they spun off and went public at the right time just to basically, yeah, they did. Interesting. So this went public at $14, January 18th. And the thing that's amazing, okay, so picture this, you know, you push it out. This got pushed out when I give you some of these numbers. Watch these numbers, because what has happened inside was, you know what's interesting here? I have an ADT system at one of our businesses. I have a Vivid system as well as a Ring. And this is how they break down, which really gets interesting. The ADT is a lot more expensive per monthly, and it's a good service. I mean, the bottom line, you know, you get ATDs, you know, but it's not a better service, as far as I can see, than the aspect of a Vivid or a Ring system. Now, this is what the differences are. The Amazon, once they come in with the Ring system, that's only $10 a month. The Vivid system, you can do either or. You can just buy it, and then it's on your camera, it's on your phone, depending on how many cameras you put up. No matter which way I look at this, the Amazon, the Google, basically Nest system, this stock's in trouble, man, because the business of security has changed dramatically, and it's come down dramatically. I'd have to look at the bill, but I think I'm at $59 a month on ADT. So that stock's in trouble. But you can see also what they actually did, and they knew they were in trouble. They pushed that out right after last Christmas, because they realized last Christmas, folks, the security systems, that was one of the best-selling things on Amazon as well as Google. Let's go to Warren in Denver, Colorado. Hey, Warren, what's going on?
Hi, Tom. While you were looking at ADT, I was thinking about BCS in the 7s. It's got into my price range, and I want to know how low you think this stock can go.
Okay, let's take a look. We got Barclays, the low, it was hit today, $7.60. The high is $12.55. They're going to be coming out with their numbers the 21st of February. Okay, so, well, you might as well wait for this high volume low from 2016. Look at that thing, man. It's
really sitting out there, huh?
Yeah, it is. You know, if you happen to be watching Tiger TV, folks, what you're going to see is that $6.67 had 280 million shares. Now, this is wild, man, when you see this, because the stock hit there in 2016. Then it does a bounce all the way up to $12.55. Let me just bring this back on a monthly, because I want to see. Oh, interesting.
This is sort of like the J.P. Morgan of the UK.
Yeah, no, listen, I'm with you, man. But you can see. Okay, so monthly. This is pretty cool, actually. So, Warren, what you have is this, right? you're coming down there, but this volume's contracting, which is pretty cool, man. You know, you're not going to do near 437. Well, right now we're at 35, and you're coming into the high volume low from 08.
Right.
You know, I just let it get a little bit lower. Let me just see.
That's what I was kind of thinking. It's kind of coming into its territory right here, huh?
Yeah, and that pays a 3.17 dividend.
It'll probably be able to pay that, like J.P. Morgan can pay its dividend.
No, I agree. Now, this is what's cool, though. So watch this, folks. This is where the aspect that you'd be doing two different things here, right? You'd be buying the equity, but because this is a UK stock, you're transferring US dollars into British pounds.
Worth a lot more at 125.
Which is great. I know. Because guess what, folks? This is not going to, you know, the pound can go to 118, but this ain't going to stay there, man. Just it's not going to stay there, man. So that's pretty cool because you have the currency differential as well as, you know, bottom line, buying a bank. And guess what? J.P. Morgan's not going away. Barclays not going away. Yeah, do they have risk out there? Evidently, all the banks have some risk right now, but yeah.
So the other bank that is in Euroland that is kind of in trouble is, of course, Deutsche Bank. And what do you think is going to happen with Deutsche Bank, DB?
I wouldn't touch Deutsche Bank. What will end up happening is that the German government will come in and make sure it's all right, but that doesn't mean that the shareholders will be all right.
Right. They could dilute the shareholders way down.
Yeah, no, they could BK everyone. They could take them all out. I mean, that's the reality. And Deutsche Bank, folks, is at all-time lows right now. It hit 823 today. And if I bring this back, I can bring this back 50 years. I don't think it's never traded there. So that's in trouble. But my take on that is that the shareholders will lose. Folks that have their money in there won't. I mean, they're going to. Germany's strong, man. You know, they have to save that bank, and they have monster problems. There's no doubt, man. And I suspect when all's said and done, guess what? The government will have to take them out. So.
Right. Okay. Well,
okay,
thanks a lot for looking at those two stocks for me, Tom. I really appreciate it, sir. Thank you very much.
Great one, man.
Show.
A safe one. Okay. And what's going to get interesting here too, folks, is that Fannie Mae, Freddie Mac. Okay, there's been huge deals in Fannie Mae and Freddie Mac since the aspect of the downdraft of Fannie of 08. And what we have out here, let's see, right now is that Trump's looking to put a new person in at Fannie Mae and Freddie Mac. What's going to be interesting here, this is when you're going to see all the swords out once again. Because what you do have is that, you know, there's plenty of people that think that this should be private. There's plenty of people that think loan-wise it should be backed by the government. And this fight's going to be on. So we'll see how this whole thing shakes out in the next couple of days. The person that they are putting in, where is this person? Let me see if I can find this again. Fannie Mae. Because this guy's from the Fannie Mae, from the Cato Institute, which I've had plenty of people on from the Cato Institute. And the bottom line is that there's no way that someone in the Cato Institute is going to think there should be any backing whatsoever. Now, where that's going to come in conflict, and my take is that it won't happen because it will come in conflict with Trump and his real estate empire, is that would basically be saying that there'd be less money available with backing. And I just don't see that happening. Stay right there, folks. Come right back.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3x bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. We had Exxon down $1.10. You had the Citigroup down 128. Oxy was down 210. That's a big number. Transocean's in problems. That's got some big problems, folks. They could get down to the 0 mark. McDonald's was up $1.69. Now, if you want to see another one that they basically brought public, and it's going to be trouble in paradise, it's At Home. You know, so At Home, they own and operate home decorator stores. This was brought public, let's see, March, I think. Yeah, March of 2018. This was brought public at $30. The low for the year is that's this year, folks. So it was brought public. Oh, here. So check this out. Oh, this gets heavier. Yeah, 2018. Okay. So they brought it public at $30 in March. In June, they come back to the market and did a secondary. So they put 6 million shares out first. Here, let me bring this up so you can see this, though, right there. Next screen should give it to you. Okay, cool. So they brought it public in March at $30, did 6.9 million shares. Did a secondary in June at $37.90 and sold another 8 million. Then in September, this is just amazing, did a third, sold it at $33.20, and did 10 million. So picture this. We have 25 million shares outstanding, all at a nice loss. Now, that's not the end of it, though. So watch this. So the low for the year is today, $19. The high's 40. Curious whether they even make money. Okay, we take a look at the revenue. Okay, so the revenue, they do make money. They made they made 94 cents last year. They plan on making $1.31 this year. But check this out. On $1.31 this year, they're banking on last quarter they made 18 cents. They're banking on making 47 cents this quarter. Not going to happen. Watch this. This is a monster ABC down. So the low for the year is 1979. The high is 40. Take a look at this. What you're going to see a nice break with volume here. So on the daily basis, you can see last week this thing blew away its swing point. You did 6 million shares versus 24 million. Put this on a weekly, because what you're going to see, this is a very large ABC down, folks. And your A point on this is $37.81. That was the high generated in August of 2018. So $37.81, $25.24. So you get approximately $12. 31 is your C point. So we're dealing with 18 bucks, right? Yeah, $18. You're at 20 right now. That being said, you can see how this blasted into its strength. We did 14.7 million versus 4.3. 18's coming at us. And let me put this on a monthly. And we'll see if the 18's even going to hold. Because the way this is actually, oh, look at this, actually. Wow. Yeah, we'll see if 18 holds. But you can see you get a lot of equities that actually they pushed out because we've been going up so long, folks. The bottom line is that it does make it a lot easier pushing out an IPO when you've been going higher. And if you want to understand price and volume, ABC structures on the way up, on the way down, over at Amazon, folks, check out my book, The Art of Time in the Trade, How Price and Volume Move Markets, because I can tell you flat out, these markets are moving with price and volume, then moving with Fibonacci sequences, and they're doing ABC structures in a huge way right across the markets. That's the bottom line. We take a look at some of the other higher volume equities. Well, here, let me show you something with Microsoft, because this is a cool deal looking at one of the stronger stocks and see how it reacted in a day that, bottom line, you had gone down, you come back up, you have some juice behind the move. Guess what? Microsoft is going into 61 million shares. You still only did 40. That is telling you quite a bit, meaning that you have one of the strongest stocks out here. Bottom line, you had a nice pop. There's no doubt about that. But guess what? Not enough juice in the move. What's going to get interesting here is that, you had Uber, well, actually, Lyft was the first to basically set in motion that they were going to basically do an IPO coming out of the gate. Uber is following this up in a huge way, and they both are going to be basically racing to get this baby out. Why? Because what ends up happening, folks, is that there's only so much money to be had, meaning on IPOs. These are the two big competitors. So the real question is going to be who gets out first. Now, the differential in valuations of the broker-dealer community, the banking community, are pretty substantial. Banks have basically put a capitalization price on Lyft ranging from 18 billion to 30 billion. Uber, whole different ball game. They get Uber up at like 120 billion. So you can see that who is going to get the oxygen sucked out of them. And what that specifically means is that if Uber does get out quicker than Lyft, Uber will get the bread, because that's just kind of how it goes. It's the first to market. If Lyft gets out there first, that I suspect Lyft will do good, and that won't stop Uber from doing good, because you can see the differential in the money. The market can handle 18 to 30 billion in a heartbeat. $120 billion IPO, that is one monster IPO. And what does happen inside the IPO business in general is this. markets right now, okay, this is not the time that you try to push out an IPO when you get an aspect of that. You know, the SPY just went from a price point of 293 and you're at 264. If we actually just look at the cash S&P, you know, cash S&P went from a price point of 2940 to 2583. What they'll try to do is, you know, wait for a really good bounce. You get the bounce going, you know, the bottom line is that is an easier way to basically push into higher price, meaning for the IPO. You know, they're not going to get an IPO going on the way down. So I expect what you're going to see out here, a couple they're basically floating. That'll be the second quarter. But what I expect you're going to actually see out here is that they're going to try to get this out in the first quarter because of the way that we came down. They're going to try to get this out. They'll have everything set up. They'll do a fast, you know, I'm sure the paperwork's already done for both of them. So what they'll do a fast road show. And as soon as you see the first real good bounce in this marketplace, meaning in the first quarter, you will see both of those get pushed out. Because bottom line, that is when you can get some, well, you're going to get higher valuations. That's my point. Dow Industrials finished up 34, NASDAQ up 51, S&P's up 5.5. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if you want to see just how the basically Google, Amazon of the world has changed shopping habits in general, folks, Catalina Marketing. Okay, so this used to be a public company. Bottom line is that they went private, took them private. Now, Catalina Marketing, you'll be familiar with it because when you're going to grocery stores and all that, what ends up happening is that out of your coupons coming out of your register, you get all those coupons. They know what you shop at and all that. Well, guess what? They're going BK this afternoon. Bottom line, why? Guess what? It is a different targeted market right now, and they got us targeted so much more than they did, meaning companies, than they did 15, 20 years ago. Bottom line is that now they don't need the cash register in order to see what we buy, when we buy it, and attach it to our credit card. Bottom line is that when you take a look at Google, you take a look at Amazon, probably Microsoft, all of the above, they know exactly where we are, what we do, and all of the above because of what's on our cell phone. The apps on the cell phone basically telling them 24 hours a day where we are, what we do, what we buy, and all of the above. But that's pretty wild, man, because I remember that. I forgot how long ago it went private. But that was a big company, man, and they were printing money at one particular case. And bottom line is that they're going to basically still be around because they. Well, it looks like they're going to file for bankruptcy Wednesday, and they're going to get. Bottom line is that they're going to get some new money in there to stay alive. But everyone else gets wiped out. So. Pretty wild, no doubt about that. Listen, folks, if you like the metal market, go check out the gold report. You can get it for a month, 6 months, a year. All comes with a 30-day money-back guarantee. Bottom line, we'll see where the baby goes. My take is that we're at $12.49. We're going to $13.30. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. You might as well grab it and have a good time, folks. Wow! Go get them, folks.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.